Hey, what's up with you guys? This is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm gonna break down the trade that happened this morning on NAS100, guys, which was a beautiful trade, textbook setup. Nothing could be better than this, guys. I want to share it with you guys. It's not going to be a long video because there was only one setup that happened today, and it was NAS100. So as you know, guys, 8 a.m. Eastern Standard Time, I wake up, I check out the charts on a 5-minute time frame, and then I notice on NAS100 that we have a really good consolidation. See, this consolidation is really clear, and we have a really good consolidation around this area on a 5-minute time frame. So the only thing I did was to zoom out to identify the trend. I noticed we have a consolidation, and then after that I noticed that we have a very strong break of a structure around this area. So it means that the trend of the market is towards downside because of these strong bearish candles that literally formed right before the current time, which is 8 in the morning. So something that really caught my attention was above this candle. See, a few very strong bearish engulfing candles, and literally after that I noticed that we have this high probability order block from here to here because we take the last two candles, remember? And then right here we have no high probability order blocks. So because since we are in consolidation on 5-minute time frame, I can also switch my time to 15-minute to see what's going on exactly. And as you know, there's no high probability, there's only one high probability order block from here to here. So even this one it got actually respected. This order block got respected as well during kind of close to New York session. It was 5:30 Eastern Standard Time, which is in London session exactly. Let me show you. These are the sessions. Yeah, this is actually London. This is still London session, and it was a really beautiful setup. So we had this high probability order block that literally tapped into, got respected, it's going towards upside. And then on 5-minute time frame, I'm going to remove this because, you know, we are not trading around that time. We have no high probability order blocks. So the only thing I could do is to wait for the candle to tap into this level. And if it gives me good confirmation, then I would take my sell position. Otherwise, I just wait for it to see how it reacts. If it breaks above the candle, above the zone, I immediately remove my zone. The reason is that it's invalid because we are only using high probability order blocks or supply and demand zones. And also one more thing that we can do is that since we have a break of a structure around this area, we can also use our Fibonacci level from the bottom all the way to the top where the correction wants to start, but we don't know when it's going to start. So I'm going to delete this because it never tapped into our golden zone and the correction actually didn't start here. So now the only thing I'm gonna do is to wait for it to tap into this level, and then I take my sell position. See, this one literally tapped into this level. So what I personally do is that I always, when the price taps into this level, I put my sell stop below this candle. And since we have a really huge order block, like, you know, it's kind of huge. See, from here to here is almost 200 pips. I'm not going to put my stop loss here because if I put my stop loss over here, I need to put my TP right here. I'm not saying it won't work, but I'm more willing to take the risk to put it above the candle because we have kind of a wide order block. So I always say it on my videos that put your stop loss above or below the order block, but since we have a wide one, I just decided to put it right here. And as I said, I put my now it's at 1:2 risk reward ratio, but if I want to make it 1:1, it will be even better because it's actually tighter. And got triggered, and here we are. It literally tapped into my TP, and I think it kept going down because even if I wanted to take it all the way to here, I could have done it, and it literally did. See, it's a 1 to almost 3 risk to reward ratio trade just by using one strategy, which is high probability supply and demand zones. And in this case, since we have a consolidating market, then we know that there's a high chance that this order block is going to work, and it did just because of one candle. And just because I put my stop loss above the candle, we have more room to take more trades. So in this case, we could have done two things. You could have taken 2 trades, and you could have closed the first one 1:1, and the second one you could have left a runner like 1:2, 1:3. but 1-to-1 is always recommended to take, and in this case you just could take your trade and be done for the day. And this is exactly what I did. I actually closed my trade somewhere around here. It was a really good one. I personally don't want to leave a runner all the time. If I feel good about something, then I would do it, but since we have, like, you know, this support level from here to here, that's why I kind of wanted to close my trade somewhere around here, and I did it. It was a really good risk reward ratio. It was a very clean one. The order block was really clean, the structure was really clean, the 15-minute demand zone got respected, everything was really good, and it went smoothly. So, but if I don't want to consider the support level, you know, I just could have left a runner, and after it hit my 1-to-1 risk to reward ratio trade, then I move my stop loss to break even, and I just wait for it all the way up to here if I wanted to wait. But I think it didn't happen. Oh yeah, see, it literally came all the way to here, but not here, because there's so much liquidity around this area. You could have, you know, you should close your trade. You should have closed your trade somewhere around here, but I personally, as I said, don't do that. And then after that, it just literally went up, stopped out, broke above this zone, and made it invalid. So that's how you need to trade, guys. You just first need to identify high probability supply and demand zones, and then when the price tap into that level, then you need to wait for the candle to form, and if it was a good one, then you can take your buy or sell position and put your stop loss above or below the order block if it's not too wide. But in this case, I wanted to increase my risk to reward ratio, and also I was more willing to take a trade. I was more willing to take a risk more than usual, just because it was a really clean setup. But as I said, super clean, 1-to-1 trade, very easy, guys. Everybody can do it. If you watch all my videos, you see that I always talk about order blocks even more than Fibonacci retracement levels, because there's always high chance that high probability supply and demand zones work in more cases than Fibonacci levels. Because when you want to use Fibonacci, guys, I can guarantee you, almost guarantee you, that you can also find a high probability supply and demand zone. So just wait for those ones to get tapped into, so you can actually increase your win rate. Around a specific time, you don't have to trade 24/7. Just wake up, you know, around before London session. It would be a great one, but you know, my time frame is kind of, you know, it's gonna be 2 a.m. in my time. I can't do it. That's why I wake up around New York session, but you can wake up around London session, even New York session. It's a really good one. Just the first 2 hours, 3 hours, focus on the charts, GBPUSD, EURUSD, gold, NAS100, see how many setup it gives you, and just take it. Take 1-to-1. You're good for the day, guys. If you take 10 pips a day consistently, then I can actually show you how much your balance is going to increase over time. So even in this case, I can use my Fibonacci, guys. See, because I just need to wait for a correction, and it actually never happened, because it just kept going up and up and up, because, you know, US pair is increasing. That's why gold dropped significantly. So that's it for this analysis, guys. I hope that you liked it. If you did, give me a thumbs up, subscribe to my channel, and turn on the notification bell, so next time when I upload a video, you'll get notified. And before you go, let me show you the results of Gold Incubator during London session, guys. We had a very small drawdown, like, not, you know, it's not a drawdown, it's not a closed profit or a closed loss, it's a drawdown that we had in April 14th. For today's date is April 19th, and in overall we gained over 70% profit, which is almost 1.24% gain daily on a $1,500 account, which is $685 in profit, guys. And if you want to grab your license, you know what to do. Go check out smartyincubator.com and grab your license, send us your account number, and we'll manually activate your account. And if you have any question, guys, drop your comment here, or, you know, send me an email. I personally get back to you and answer all your questions. So thanks for watching this video, guys, and see you in the next one.